Saturday, February 28th, 09:25 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Since the end of the month for trading just completed yesterday, for the second month of the year, still first quarter of the year, let's go look at the major U.S. stock indexes. If you don't know, these stock indexes, you could trade, invest in the equity as well as options. So this is a 10-year chart of 10 years of history. Each candle's a month on the S&P 500. This S&P 500 stock index is the go-to stock indexes that financial institutions and will-informed investors look at to gauge their investment portfolio of stocks, as well as other assets to determine if they're performing equal or better. One could simply invest in this index directly from the financial exchange instead of paying additional fees or having some other company manage it for you and not necessarily buying at the smart opportunities of dollar cost average. This index is managed by a company, and periodically they change and replace companies in it that are underperforming with better ones. So looking here at the 10 years, the bottom left, the top right, for the month, we closed red. We also made a lower high, lower low, new low for the year. Then the prior month. That means the trend reversed. Trend reversed down. The momentum is down. Lower high, lower low. We also closed red for the month. Look how small the trading range is, those two prior months, compared to this momentum from the bottom up. Often, when you have a pattern of candlesticks like this, it's interpreted as churching, distribution, smart money selling, not necessarily selling everything in the index, but more like rotating to different sectors. So one could participate in the sectors instead of this index, because this index is heavily weighted to just a few companies. You might have heard of some of them, Magnificent Seven, which are part of the NASDAQ. And then the sectors, if you don't know, the top three heavily weighted sectors in the S&P 500, technology, around 20%, healthcare, around 15%, and financials, around 14%. So those three sectors weigh the largest percentage in this index, and those sectors are not healthy. This is the NASDAQ 100. We haven't even taken out the high of last year. It's underperforming the S&P 500. For the month, we made a lower high, lower low. The trend is down. Again, the Magnificent Seven stocks are part of the NASDAQ 100, and they are underperforming. This index is part of the S&P 500. Yeah, the trend is down. The Dow Jones Industrial Average, very small index, only 30 companies. This index is one of the oldest stock indexes, and it's very diversified. But again, 30 companies, and the financial institutions, the banks, they are a large weighted average in this index. We made an all-time new high, higher low, bearish pin bar. That's a big red single to me, bearish pin bar. Here, down here, the low of last year, that was a bullish pin bar. Got it? Bearish, bullish. Time will tell how it play out. Again, this index also is inside the S&P 500. Dow Jones Transport, 20 companies. Transportation industry, some airlines, truckings, trains, all-time new high. Performing better than the S&P 500, performing better than the NASDAQ 100. Are you invested in this index? Are you invested in the ones that are trending down, that are underperforming? Dow Jones Utility, all-time new high. We finally took out the high of last year. Outstanding. 15 utility companies. They pay dividends. So if you want to invest in stocks, stock index that pay dividends, some pay monthly, quarterly, yearly for income. A lot of people do that because they realize, speculate, seeing growth is not doing well, such as in the technology or financial industries. So the growth is slowing down for whatever economical reasons, business reasons, but they still want to earn income. Well, you're not going to earn income if the stock doesn't continue going higher. But these companies pay dividends. So the company stock may have growth, stagnate, but at least it's paying a dividend. Those dividends change periodically. The board members vote. Some raise the dividends, some reduce the dividends. That's another concern. But again, look at this. Outstanding, outperforming the S&P 500, outperforming the NASDAQ 100. And you're getting paid to sit on your hands. The dividends vary. The Russell 2000. This is not part of the S&P 500. Smaller companies. Inside candle for the month. Big wicks, both months on top. Very concerning. This index, these companies are much more impacted on Federal Reserve policy, on interest rates. A lot of these don't have huge cash flow. A lot of them borrow money. A lot of them are in big debt. So higher interest rates impacts them more. First, let's say the companies on the Dow Jones Industrial, which are global, worldwide, huge amount of cash, and they control worldwide markets with less competition where they can raise prices or demand cost cuts from either labor or suppliers, as well as energy. So there you go. 6 major stock indexes, diversified in each. Not all of them performing in a healthy market as you would expect. Very concerning. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching. Thank you for your support.